In this video, I'll be breaking down how much you need to make in order to afford a 2023 Ford Ranger. I think you should really consider following one of these rules in order to avoid making a huge car buying mistake that will end up setting you back financially for years to come. I've also included a link to a free auto quote where you could save up to about $600 a year in the description below. It takes like 20-30 seconds to fill out, but more on that later. There are 4 options I'll be going over today, and you can decide on which one suits you the best depending on how into cars you are. Some people just want a reliable form of transportation, and some are willing to sacrifice quite a lot more in order to get the car that they really want. Stick around to the end of the video, find out what method would be best for your personal situation. This is 4 Wheel Finance, a channel dedicated to helping you make smart car buying decisions. Before I dive into the first rule, these videos take quite a lot of time and effort to make. Please give it a like, subscribe, comment down below what other vehicles that you would like to see. The first rule is the 24-10 rule, and this states that you should put down at least 20% on the car. You shouldn't finance it for more than 4 years or 48 months, and the payment shouldn't be more than 10% of your monthly gross income. Since the 2023 Ford Ranger has an MSRP of about $27,500, you'd need to put down $5,500. And with the average new vehicle interest rate of 3.86% in a 48-month term, this would bring your monthly payment to $495.36. Take note that you're also paying about $1,800 here in interest. Bankrate states that the average monthly insurance cost is $148 a month, but this varies quite a lot from person to person, your age, your driving habits, the demographic, what part of the country you live in. So use that smart financial link, see exactly how much it would cost for you to insure something like this 2023 Ford Ranger. This brings your monthly total to $643.36. Back to that 24-10 rule, given your monthly cost is $643.36, you would need a monthly gross income of $6,433, which would add up to about $77,203 annually. I really encourage you to take a look at the opportunity cost here. If you were to buy a cheaper $10,000 car and put what would be your car payment of $495.36 in the market instead, over the course of 5 years and a relatively conservative 6% rate of return, this would turn into about $34,500. Gaining over $5,000 here-ish in interest. Take a look at those Acorns and M1 Finance links down there in the description. It's super easy to get started investing, and I highly encourage you to get started as early as you can. Even a small amount of money can turn into something special over a long period of time. And this is just for the first 5 years. If you were to continue that for 10 years, it would amount to $80,874.60 and over $20,000 in interest. Again, just as a 6% rate of return, which is pretty conservative, the stock market tends to average around 10% per year, just for reference. The next rule here is my own, and for my rule, I think you should have at least a 6-month emergency fund, invest 15% of your gross income into your 401k, and max out ideally your Roth IRA and your HSA, but I'll leave the HSA portion as optional. And I know that this seems like quite a lot of saving and investing, but then I don't give you a monthly percentage rule that you have to stick to in terms of spending. It's up to you to decide if you want to spend more of your monthly excess income on a vehicle or car parts, or if you'd rather spend less, save more, or go out to eat more, or go on vacations, etc. And the 6-month emergency fund is just there, obviously, in the case of an emergency, like you lose your job. And I highly think it's important to have that 6 months there, especially if you're in an industry such as commission-based or sales, where that monthly income can be a little spotty from time to time. And the investment portion gives you a little bit of financial security later in life when you're going to need it the most. On average, the average American lives to about 78 years old. And so there's a lot of people that say nothing's guaranteed, but on average, people live to 78 years old. And so I highly encourage you to get started investing now, save for your future, because there's a very, very high likelihood that you're going to live to that age and you're going to need that money. And it's difficult to put a value on having peace of mind for yourself or for your family's future. Next rule is the Dave Ramsey rule, and he thinks you should have at least a 3 to 6 month emergency fund. The vehicle shouldn't be more than 50% of your annual gross income, and you should purchase it in cash. Given that the 2023 Ford Ranger starts at about $27,500, your annual gross income would need to be a minimum of $55,000. Ideally, it's nice to purchase a vehicle in cash, as you would avoid having to pay that $1,800 in interest, and your insurance would be a little bit lower. But obviously, not everybody has $28,000 in cash that they can put towards a car, and there's a small chance that you could actually make more money if that money was invested in the market. Final rule we'll be going over today is the 1/10 rule, which is developed by Financial Samurai. Personally, one that I think the majority of people trying to build their wealth rapidly should consider. It really doesn't allow you to buy a new vehicle, but it's designed to help you spend responsibly, which reduces your financial car ownership stress and increases your net worth over time. This rule is pretty straightforward. It states that you shouldn't spend more than 10% of your gross annual income on a vehicle. It can be new or old, but obviously for the vast majority of people, it's going to be used, and you need to own that vehicle for at least 5 years, but ideally more. And the theory here is to help you minimize your financial stress, frees up a little bit of money to invest in assets or opportunities that may come your way, things that go up in value. It's a lot more difficult and stressful making important life decisions when you're worried about your payments each and every month, especially car payments. That's just something that doesn't really need to be there. Once again, this is 4-Wheel Finance. If you have any questions regarding car buying or how much of a car that you can afford, please leave them down there in the comments below. And don't forget to give a look at that Smart Financial link if you're interested in saving up to $600